Have you ever wondered how long the Internal Revenue Service has to look into your tax returns, or perhaps collect on past due taxes? It is a question that brings up a lot of curiosity and sometimes a little anxiety. When the Internal Revenue Service's statute of limitations expires, it generally means the agency can no longer assess additional tax, levy, or sue you in court to collect a tax debt for that specific tax period. This provides a crucial endpoint to your tax obligations for those years, offering a sense of closure and relief. The reason for these time limits is rooted in fairness and administrative practicality. Without them, taxpayers could face indefinite uncertainty, and the Internal Revenue Service would be burdened with maintaining records and pursuing audits forever. For most federal income tax returns, the standard statute of limitations for assessment is 3 years from the date you filed your original return, or the due date of the return, whichever is later. However, this period can extend to 6 years if you substantially understate your gross income by more than 25%, and there is no limit if you file a fraudulent return or fail to file at all. So, what does this mean for you? It is essential to keep accurate and complete tax records for at least 3 to 6 years, depending on your situation, after you file a return. This ensures you have all necessary documentation should the Internal Revenue Service have questions within the limitation period. Understanding when your personal clock starts and when it expires allows you to manage your tax history with confidence, knowing that past periods eventually reach a definitive conclusion. An important insight is that filing an amended return does not automatically restart the statute of limitations for the entire original return. Instead, the statute for the specific issues addressed in the amended return typically remains open for 3 years from the date the amended return was filed, or the original 3-year period, whichever is later. This nuanced rule offers protection while still allowing corrections to be made. Ultimately, knowing about the Internal Revenue Service's statute of limitations empowers you. It provides clarity on how long you need to retain records and removes the fear of indefinite scrutiny, allowing you to plan your financial future with a clearer understanding of your past tax responsibilities.